Welcome to Manicflow Money, a simple approach to looking at the world we live in and what could be affecting our asset, saving, and retirement choices. Here's what we have today. It's an article written by Paolo Ardano called Building the Blockchain Community is Essential for Further Developments, because the power of a strong community and scaling blockchain-based projects should not be understated. Cryptocurrency was built on the premise that a reimagined financial system could exist. It was brought to life by a community that supported these ideals and worked tirelessly to bring them to fruition. As the entire blockchain community grows, so does a recognition that cryptocurrency is important. And according to Big Four, the audit from Delia's 2020 Global Blockchain Survey, more than half of those surveyed believe that the digital assets will be very important, while almost 90% of respondents feel that digital assets are going to be important to the industries in the next 3 years. Cryptocurrency remains the priority for blockchain space within traditional hubs such as Hong Kong, Singapore, as outlined in the report. Such growing acceptance and support for blockchain and digital assets globally have proved to be important to the adoption and advancements within the ecosystem. And if you pay attention to what's going on this week with Ethereum, it's been amazing. It started on Saturday, and I believe we're about 4.25 right now. So why the massive rush into decentralization? Well, cryptocurrencies were designed to be decentralized, without any connection to any centralized third party, forming the bedrock for cryptocurrencies like Bitcoin. Decentralization allows users to transact digital assets directly with another user without the need for a third party, like a bank, to be involved. It's led to a decentralized form of finance that enables more open and transparent financial system supported by decentralized technologies like blockchain. Decentralized finance provides more inclusive access to financial services and credit at a lower cost. This includes smart contracts, protocols, decentralized applications, and digital currencies such as Bitcoin stable coins or CBDCs, notably Tether, which you can trade now, USDT, which is different than the USDC. But the Tether coin growing, you can see it. Just log on to any exchange. The growing usage in DeFi is indicative of the pivotal role that will play in that sector. Decentralization also sees projects driven by community ideals, ensuring free flow of information within the community. Community-driven development has given developers the control over the process, which, while the resources and the decision-making authority and the directly hands of the community, if you hold a coin, you're making decisions. The resources and the decision-making authority are directly in the hands of the community. That's it. Period. You want to make another blockchain? You want to put one in front? You hold coins, you're making choices. That's how the future works. The community-first ethos. There have been many examples of projects and exchanges in the industry that have taken a community-first stance to development, product offering, and overall day-to-day operations. For example, the ethos of Bitfinex. It's always been to remain driven by its community and designed for its community. Bitfinex is now, I'm probably not even saying that right, it's now one of the most advanced, most liquid exchanges in the world. Polkadot, which just hit some exchanges in the last few weeks, has built a community of anticipated followers. It is now expected to be the most anticipated project since Bitcoin and Ethereum. I'm going to repeat that. Polkadot. That is DOT, by the way. DOT. Polkadot. built a community of anticipated followers, and is now expected to be the most anticipated project since Bitcoin and Ethereum, which is transitioning to Ethereum 2.0 with the support of its dedicated community. Trading communities and decentralized social networks are important as a sub-community is crypto traders. Understanding the needs and feedback of the trading communities, many projects and exchanges are now just completely focused on creating a place for traders to communicate with one another. It has helped the industry flourish. It's peer-to-peer, guys. That's what blockchain does. It creates a pathway for new tokens, new projects, new digital assets based off community standards, community output, community-driven communication. This is if you think in terms of semantics or syntax or any type of community where you just need the data to make good choices, it's time to think about blockchain. It's time to remove any of the abscess thought you may have that are blocking you from considering what it is. If you're already into crypto, great. If you're a professional trader, great. If you are on Coinbase or Binance and just figured out how to link up your bank account, great. You're taking a step forward. That's what Manicflow money is all about. This is a simple approach. Taking a look at the world around us and the things that are affecting our choices, and the things that are affecting our choices in the highest degree right now is a cashless society. It's driving innovation into blockchain technology. Ultimately, innovation comes from outside and within. Innovation is vital within industries because it's given companies an edge in penetrating markets faster. Communication. Innovation can also provide connectivity to developing markets, possibly leading to bigger opportunities. Listening to the opinions and needs of the community can facilitate and accelerate innovation within an industry. And I will repeat that again, because listening to the opinions and needs of the community can facilitate and accelerate innovation within an industry. Building the blockchain community has led to many new innovations and further adoption of blockchain technology and cryptocurrencies. This intense focus on community building can only help the digital asset space to fulfill its immense potential. I want to end this episode with a video. This is a very highly trained professional speaking in regards to her study into Sweden, who is trying to be the leader in a cashless society. I covered that in my first video, Cash is Dead. Sweden wants to be the first central bank to have CBDCs out. They want to be the first cash that they want to. Come on, it's Sweden. Why wouldn't they? Somebody's got to do it. But she has an excellent perspective, a realistic perspective on what's happening over there, the timeline, some history for you in regards to central banks and the 1600s, and then what might happen because she's currently living in Australia.
We'll switch gears now and talk about central bank digital currencies more broadly. Camilla, you conducted a study tour of Sweden last year, and you also live in Sydney. So I'd like you to reflect briefly on, how could a central bank issued e-krona add to the payment mix for Swedes, given they already have a very convenient payment system called Swish, integrated with QR codes and digital ID. And turning to Australia, the RBA has launched the new payments platform. So how will that functionality affect Australians' appetite for an Aussie dollar CBDC?
Yes, so if I start with Sweden first, so actually more or less on the day, the study tour to Sweden happened 27th of June last year. And I took 12, or the Emerging Payment Association took 12 payments lead from Asia to learn about the cashless society and how Sweden has come to lead the race to become the first cashless country in the world. And during that time, we spent one of the sessions with Riksbanken. And very interesting, because even after 1 hour and going through the background behind it, we all came out and it's not completely clear what will actually a Swedish e-krona bring. And so Riksbanken's standpoint is that the population should have access to risk-free money, that we shouldn't be reliant on private money. Funny, I have to share a short anecdote that it's actually Sweden had the first central bank in the world in 1668, and it came about that it was the commercial bank, Stockholm Banco, had two innovations. They started to take deposits and use those deposits to give financial loans. And that was very successful, but the deposits was short-term and the loans was long-term. So they started to do credit notes for this, which was actually Europe's first paper money. But paper was quick to produce, so it created inflation and it all crashed, and the government stepped in and created the first central bank. So we sort of were saying back around, have they learned from history and they don't want to be reliant on private money? But one could argue then that you could insure the deposits instead, and that would actually be a quicker way to do it than create an e-krona. The other leg to it is resiliency. You don't want to be reliant on a private payments infrastructure. What would it be if it's an outage or a cybersecurity attack? That's something that's been very relevant in Australia over the last weeks. But again, I would argue, do you have to create a CBDC for that? Or can that be regulated? So I think what's missing is like that really the cost benefit analysis of it. But there is a project on the go. There is a pilot, not in the way as in China, but they're testing and they have different stakeholders in this pilot, and they will come to a decision in January next year. But for time being, I think, yes, I don't see the obvious reason for Sweden to go with the central bank backed money.
Okay, what about Australia? Do you see any appetite there for a CBDC?
Again, no, and even more so because we have such a good real-time payments network now with MPP, and I think that is the same as you see in other Asian countries that have developing their real-time payments networks. You have that new infrastructure that is very reliant, and if you compare it to a Swiss real-time payments network, NPP is actually can do all different kind of payments. It's not just consumer to consumer or business to business, all the different layers that we know a payments network has to cater for. Next year, we see NPP being able to do request for payments. And also we have a lot of innovation that is developed on top of MPP. So that is one reason I don't think that Australia will go down the route of CBDCs. And also Australia just started to print the next generation of cash or money. And in later this year, we will see a new $100 note coming out. So it's all indication that I don't think that we will see CBDC in Australia.
Every day is a school day, and I hope that sharing this content will help. If you've made it this far, please smash the red subscribe button and like this video. A reminder, I am a Main Street provider and not a Wall Street advisor.